Hey everybody, welcome back to another cost accounting in Excel video. Today we will be doing some problems with direct cost variances. That's the direct materials and the direct labor. Please take note, as always, that the orange cells in these problems are going to be the key inputs given to you in the question, and the blue cells are going to represent the answers to the questions being asked. It's always important to label that information appropriately so you can follow along with the problem as you're doing it. Now let's get started. We have 4 problems here for you today that all stem from the same information, so let's read it. The Freya Corporation creates clothing products. A special silk dress requires the following. The standard amount of direct materials is going to be 2 yards at $13 per yard. The standard amount of direct manufacturing labor is going to be 1.5 hours at $22 an hour for one dress. And during the quarter, the company made 1,500 dresses and used 3,500 square yards of fabric costing $43,750. The labor hours totaled $2,150 and the labor cost was $45,150. Now let's start out here with question number 1. Compute the direct materials price variance. Now each of the variances we're going to solve for today has a difference component. It's going to be the difference in price or the difference in quantity used. In this case, we're going to calculate the price variance, and that's going to be the difference between the standard price and the actual price. And then we're going to quantify it using the actual quantity of materials used. So let's calculate that right now. So the difference in price is going to be the standard price of direct materials, which is given in the problem at $13 per yard of material. But we don't have the actual price given in the same way, so we're going to have to solve for it here. The total direct material cost of $43,750 divided by 3,500 yards of material is going to give us our cost per yard. In this case, we have a standard price of $13 per yard, an actual price of $12.50 per yard, giving us a difference in price of 50 cents. So we're going to take this difference in price and multiply it by the actual quantity used. And that's given to us in the problem. We've already looked at it. It's going to be 3,500 yards. So the price variance is going to be $1,750. However, we're not done yet. A lot of these problems are going to ask you to solve for the price variance, but you also have to say if it's favorable or unfavorable. And I always like to say, don't think of it as one thing minus another thing. And if it's positive, it's favorable, or negative, it's unfavorable. You can't think of it like that, because if you get a problem where you're asking for a favorable cost variance, you're going to have a different equation than if it's a favorable revenue variance or something that contributes positively. So you want some numbers to be larger, you want other numbers to be smaller. What I tell people is kind of use your brain. If it's going to cost you more money, that's bad, right? In this case, we're talking about cost, so more is worse. And we're going to go over here and plug it in with this little commentary we have typed up over here. We have our standard price. We have our actual price. And because the standard price is greater than the actual price, and this is a cost, we budgeted for more than we actually paid, this is a favorable variance. So the answer to this question is, what is the direct materials price variance? It's going to be $1,750, favorable. All right, let's move on to question number 2 here. Compute the direct materials usage variance. So again, this is going to be the difference, and this time it's going to be a quantity difference, quantity in materials used, times the standard unit cost. So let's get the difference between direct materials usage. In this case, we need to know how much materials we actually used, which is the 3,500 given there, and how many we should have used for that given output. So we produced 1,500 dresses, and we need to figure out how many yards of material we would have used producing for 1,500 dresses at our budget. So let's start there. Standard direct materials per dress is going to be 2 yards, and we're going to multiply that by what we actually produce, which is 1,500 dresses. So we thought we should have used 3,000 yards of material, but we actually used 3,500 yards of material, giving us a difference of 500 yards, 500 more yards than we expected. So this difference right here, this is again in yards, so it's only yards. right now. We have to multiply that by the standard price per yard. It's going to be $13. And that will give us a total direct materials usage variance of 6,500. But remember, we're not done yet. We have to figure out if this is favorable or unfavorable. And I probably hinted at it given you the explanation here. We used more materials than we should have. That's not very good. So because we used more materials than we should have, or more materials than we expected, the actual is greater than the standard here. Just put in other words, that's unfavorable. We used too many. So the direct materials usage variance for this problem is $6,500 and it's unfavorable. All right, number 3 here, the direct labor rate variance. So this is the price variance for direct labor. The good news is that if you've made it this far, these next 2 questions are going to be very similar to the first 2 because a price variance is still a price variance, whether it's direct materials or direct labor, and a quantity variance is still a quantity variance, again, whether it's direct materials or direct labor. Let's start out with the direct labor rate variance here. So we need to quantify the difference in labor rate and how much of an impact it had on the bottom line here. So the standard direct labor rate, that's going to be $22 per hour. And just like in that first problem, we don't have a $21 per hour, $22, $23 per hour number given in the question. We just have the total cost and the number of hours. So we're just going to solve for the labor rate here. The total direct labor cost is going to be $45,150, and the total hours is going to be $21.50. Take the cost divided by the hours, we get a cost per hour of $21. The difference there being the difference between $22 and $21, difference in rate is $1. And we're going to take that and quantify this variance, because remember, the variance isn't $1, it's $1 times the amount of hours that were incurred on the job. In this case, that's going to be the 2150 hours. So we have a direct labor rate variance of 2150. Now, remember, we're not done yet. Favorable or unfavorable? When we budgeted for $22 per hour, we actually got $21 per hour. I'd say that's a pretty good deal. So the standard is greater than the actual. The standard cost is greater than the actual cost. So that's a favorable variance here. So the direct labor rate variance in total is going to be $21.50 favorable. All right, last question here. Question number 4 is compute the direct labor efficiency variance. This is another quantity variance, just like the direct materials usage variance. It's going to be the difference in the quantity of the labor in this case times the standard labor rate. Just like before, we need to calculate the standard hours for the actual output, the standard amount of quantity for our actual output, and compare that to the actual amount of labor hours used to produce that output. That way we're kind of comparing apples to apples, a standard amount to the actual amount. All right, so the standard labor hours per dress given in the problem, that's going to be 1.5 hours per dress, and we know we completed or created 1,500 dresses, so we think that should take 2,250 hours. We're going to compare that to what we actually incurred, which is 2,150, and the difference between those two numbers is going to be our difference in quantity, and it's going to be 100 hours. We're going to take that 100 hours and multiply it by the standard direct labor rate given in the problem, $13 per hour. Oh, excuse me, it's $22 per hour. And that gets us a direct labor efficiency variance of $2,200. Just like the other 3 problems, we're not done yet though. We need to say if it's favorable or unfavorable. And you can already tell here, we've used 2,150 hours, actually, and we thought we were going to use 2,250 hours. So that's a favorable variance right there because we thought we were going to incur 2,250. We actually incurred 2,150. We didn't have to pay out people as much money as a result of that. That's a favorable variance. So that's it. That is all the direct cost variances you're going to see. Direct materials price, direct materials quantity, direct labor price, direct labor quantity, or in this case, direct materials price variance, direct materials usage variance, direct labor rate variance, and direct labor efficiency variance. Good luck.